start with a super quick revision of the most important chapter of your GST, that is input tax credit. Ready? Yes. Okay. So this is the heart. This is the heart of the GST, as we already know. Let's start, everyone. We had discussed that this ITC thing, or giving seamless credit. Okay, giving seamless credit without any troubles, giving a so that there is a no breaking of chain in between. For that particular purpose, government had introduced this concept of input tax credit, where whatever tax we pay on our inward supplies, or whatever tax we pay on our purchases of goods or services or capital goods also, the government has tried their level best to provide us the credit of the same, except in few cases. Example, when we are into composition scheme, or when we are doing any exempt supplies, at that time definitely ITC is not available, because at that time anyway the chain breaks. Right now, this provisions of ITC is there from section number 16 to section number 21, and even in rules it is there from rule number 36 to rule number 45. Similar provisions, and this is of the CGST Act and the CGST rules, and similar provisions have been made applicable for the IGST also under section number 20 of the IGST Act. Okay, then we did a few definitions. We did definitions of capital goods. Capital goods are generally those goods which are capitalized in the books of the accounts, and definitely which are going to be used in the course or furtherance of business. Right, input is those which are not capitalized, obviously that is other than goods, and used in the course of business. Input services is nothing but the service which we have availed and which we are going to use in the course or furtherance of business. Input service distributor. Input service distributor was that particular office which had received the services, okay, which had received the invoices for that services, but it did not avail the service. The service was availed by its other offices under the same PAN, right? And then the credit, and then this particular ISD distributed the credit to its offices. Right. Then after that, we studied about input tax. Input tax was all the taxes, that is CGST, all the taxes of GST, CGST, SGST, UTGST, IGST that we paid at the time of purchases. Plus, it will include two more important things. One was your IGST paid at the time of imports. Okay, IGST paid on imports, and the next one was reverse charge mechanism paid under all the laws. But yes, definitely the tax which is paid by composition scheme dealer, that is not to be included in your input tax thing. Okay, and once you take the credit of that input tax, okay, once you take the credit of that particular input tax, then we can say that that amount is called as input tax credit. Okay, these were some important definitions which we had to see. Motor car we'll see when we do the provisions. Output tax. Output tax is nothing but the tax which is payable on the outward supply. Outward supply is nothing but your supply, that is sale, barter, and all those things. Okay, zero rated supply, very, very important. In case of zero rated supply, we studied two types of transactions are included there. One is export of goods or services, or both, and the next one was supply of goods or services, or both, to SEZ unit or SEZ developer for authorized operation, so that they can export it further. Right, this is what we had studied in the definitions part. Now starting with the main provisions. First one, section number 16. Okay, in section number 16, there were first two conditions, right? Two conditions which we had to which we have to check for the purpose of eligibility for taking the ITC. The first most important condition was the registration under GST. That is, the person who wants to take the credit of the input tax, that particular person should be registered. Okay, that person should be registered, then only he can take the ITC. And second one, the goods or services or the capital goods on which he is trying to take the credit, those goods should be used in the course or furtherance of business. Very clear with this? This was given. This we had studied in the beginning of section number 16. Then after that, we saw a circular which was talking about molds and dies, which we have been seeing in so many chapters earlier. When the molds and dies, okay, there was a person called as original equipment manufacturer. Original equipment manufacturer gave free molds and dies to the component manufacturer. Right, now when it was the responsibility of the original equipment manufacturers to give the molds and dies to the component manufacturer, then in that case, means this is going to be used in the course or furtherance of business. Therefore, the cost of that molds and dies, which was actually borne by the original equipment manufacturer, ITC of that will be available to him. Okay, because it is further used in the course or furtherance of business. Okay, but let's say let's say it was not the duty of the original equipment manufacturer to provide the molds and dies to the component manufacturer, still he is provided free of cost, then ITC of that molds and dies will not be available to the original equipment manufacturer. Right, this is what we had studied. This is all about your section number 16 subsection 1. Now going on to section 16 subsection 2. Section 16 subsection 2 was talking about conditions for taking ITC, in which we had studied that there are 6 conditions, right? There are 6 conditions and all those 6 conditions must be fulfilled. Can we start, everyone? And when we are doing this, even the provisions of rule number 36 of CGST rules gets covered. Okay, first conditions out of the 6 condition was possession of tax paying document. That is the document. Registered person is taking the input tax credit. Yes, when the registered person is taking the credit, then in that case, he should be having the possession of that particular tax invoice or revised invoice or debit note or the bill of entry in case of import of goods or any document which was issued by the input service distributor. Can I say input service distributor will also issue a document to the recipient and then only the recipient will be able to take the credit of the same. Okay, ma'am, why debit note is used here? Debit note is used here to increase, if we want to increase the value of that supply or if we want to increase the tax of that particular supply, then the debit note is required to be issued. Ma'am, what about revised invoice? What is this revised invoice? Invoice you at least understand? Yes, now let's say earlier I was not at all registered. Okay, then I become liable to get registered. Okay, I was here I was not registered, then I become liable to get registered. So I apply to the authorities within a time period of 30 days to get the registration and then I get the registration. When I do everything legally, this registration will be valid with effect from the date when I was liable to get registered. Can I say till now I had not taken ITC of this particular period? Yes, I had not taken the ITC because till now I was not registered. From the day when I became liable till the day till I got the certificate. Till here I was not registered, but now my registration is with effect from that previous day. So whatever were my purchases, for this I can take a revised invoice from my supplier and I can start availing my input tax credit. Yes, and yes, then rule number 36 sub rule 2, it states that whatever document we are talking about, that should be a complete document. It should have what amount, what description of the goods, what is the amount of tax charge, what is the total value of goods or services, GST number of both the persons, GST number of the supplier as well as the recipient, and if it is an interstate supply, then the place of supply should also be mentioned there. Okay, all these things are mentioned here in the rules. Okay, then after that, yes, another thing was suppose if there was any fraud done, okay, and we paid some taxes because of some fraud, means now we got caught and we paid some taxes on that because of fraud, misstatement, purposely we suppress some particular facts, then whatever tax we paid to the government, if we ask the government, sir, can we take the credit of the same, government will say thak. Okay, then in that case there will be no ITC available, right? This was the first condition. Second condition was whenever we want to take the ITC, okay, we are the recipient, the supplier has provided us the goods, services and the capital goods, so the supplier is required to upload these details in the GSTR1, okay, or if he is required, or if he decides to file IFF, invoice furnishing facility, then he will furnish the details in GSTR1 or IFF, then it will get reflected in my GSTR2B. In the recipient's GSTR2B, it will get reflected. Then and only then, okay, then and only then ITC in that respect can be availed. Okay, this is not applicable in case of imports. Okay, important point, this is not applicable in case of imports, because in case of import, the other country's person will not sit and file GSTR1 or IFF for me. Okay, so in that case, IGST paid on imports can be taken as credit, can be availed as credit even if it is not present in my GSTR2B. Okay, this was an extra point which I am telling you here. Everyone, are you clear till here? Yes. This was the point. We have got some examples given in your book. Okay, that was the second point. First point was you should be having that tax possession document. Second point is GSTR1 or IFF should be filed by the supplier and then it will get reflected in my GSTR2B. Then and only then the credit of the same will be available. Third point, very, very important. that recipient can take the credit only if you have actually received the goods or services, except in case of bill to ship to model. Okay, in case of bill to ship to model, remember this person, this supplier, okay, A entered into a contract with B that A will supply it to B. Then B got a order from C. So B told A that you please give it to C directly. You please give it to C directly. So as soon as C receives the good, it is deemed that B has received the goods. Right? So B can take the ITC of the same. Even without receiving the goods physically, it can take the credit of the same. That was your third point. And then after that, going to the fourth one. Okay, D point, super duper important. What is there in the D point? In the D point, it talks about details of the ITC. Details of the ITC in respect of the said supply communicated to the registered person under section number 38 has not been restricted. Remember, the supplier was filing GSTR 1 or IFF. Yes, GSTR 1 is mandatory, but suppose if that quarterly or monthly return problem arises, then he is required to file that IFF. It is recommended to file the IFF so that the credit gets reflected in the recipient's GSTR 2B. Now here they are telling that the credit which is reflected in my GSTR 2B, that should not fall under restricted credit. Okay, we have like when you see GSTR 2B, there are subsheets. Okay, in that particular Excel form there are subsheets which say this credit is eligible, this credit is ineligible, or this credit is restricted, this is not restricted. So the credit should not fall under restricted column. If it falls under restricted column, then in that case ITC of that particular amount will not be available. Okay, then fifth point, tax leviable. Okay, whatever tax credit we are talking about, that should have been actually paid to the government by the supplier. Only if the government gets the tax, then only the government is going to give me the ITC. So what will happen here? Supplier gives me the invoice. Okay, I make the payment to the supplier. Okay, supplier pays the tax to the government. I take the GST credit of the same. Okay, assuming that he has paid the taxes to the government. So I take the credit on the basis of self-assessed ITC. Okay, later if we come to know, that the supplier has not paid the amount, okay, supplier has not paid the amount to the government, then in that case, we will have to reverse that particular ITC. Are you clear with this? Yes. Then, okay, now, can I say when we have availed, okay, when we avail that particular ITC, that is when we subtract it from our output tax liability, we show all these things in a return called as GSTR 3B. Okay, so in our GSTR 3B, we can take credit of all the ITC which is reflected in our GSTR 2B. But if the supplier, okay, if the supplier has not furnished his GSTR 3B for that particular period, okay, he did not furnish GSTR 3B means he has not paid the taxes on that particular supply. If he has not filed GSTR 3B till, we give him time till 30th September of the next year. If he has not filed his GSTR 3B, then in that case, whatever ITC I have taken on self-assessed basis, I will have to reverse that ITC by 30th of November. Till 30th September, he will have to file. If he does not file, then whichever return I file after 30th September till 30th November, in that GSTR 3B, I will have to reverse back that ITC. And if I don't reverse it till 30th November, then later I will have to pay it to the government along with interest under section number 50. Right? Okay, and later if the recipient, later if the supplier files the GSTR 3B and he pays the taxes to the government, then I can re-avail that credit. Okay, I can re-avail that credit. There is no time limit to re-avail that credit, but forget about the interest that you have paid to the government. Right? And the last point was even the recipient. In the previous point, we saw that the supplier is required to file the GSTR 3B. In this point, we are seeing that taxpayer, okay, that is the recipient, should also file GSTR 3B to avail the ITC. Okay, ITC is available. I saw the invoice, I have the ITC. That does not mean you have availed the ITC. If you want to avail the ITC, if you want to take the benefit of that particular ITC, please file form number GSTR 3B. Are you clear with this, everyone? Yes. Now, a few provisos. Okay, a few provisos to section number 16, subsection 2. Okay, first of all, what if you receive the goods in lots? Okay, one particular invoice, but the goods are coming in lots. Then just remember, ITC will be available only when you receive the last lot. Okay, supplier is required to pay the tax on dispatch of first lot. Okay, but recipient will get the ITC when he receives the final lot. Okay, smart government. Then next proviso to same section number 16 subsection 2. Let's say supplier has sold the goods to me, that is the recipient. Okay, I will take the ITC. Okay, but can I say I am also required to make the payment to the supplier? He sold me the goods. Can I say it is purchases for me? So I have to pay the consideration to the supplier. What if I don't pay the amount to the supplier? From where he will pay the tax to the government? Okay. So in that case, they have put a provision that the recipient is required to clear the invoice within a time period of 180 days from the date of issue of invoice. Okay. If that is not done, then in that case, I cannot take the ITC of the same, of that particular invoice. Okay, then in that case, if I still don't pay it within a time period of 180 days, then can I say I will have to reverse back my ITC, that is added to my output tax liability? Yes, along with interest at the rate of 18% under section 50. Ma'am, interest will be applicable from which date to which date? In that case, interest will be applicable from a due date to another due date. Ma'am, which due date to which due date? Okay. Let's say the tax invoice was issued in the month of November. Okay, so whatever was the due date, for filing GSTR 3B for the month of November, let's say the due date for that is December. Okay, let's say the due date for that is 20th of December. So from 20th December, the interest meter is going to start, and since the payment was not done till a time period of 180 days, let's say 180 days expire in the month of May. So whatever is the due date for the month of May, that is, let's say a due date of filing GSTR 3B for the month of May, let's say it is 20th of June. So it will go from 20th of December to 20th of June. Interest will be applicable at the rate of 18%. Okay, but later on, what if we pay the amount to the supplier later on after 180 days? Possible? Yes, then in that case, we can re-avail that ITC. Okay, we can re-avail that ITC, but forget about the interest paid to the government. Okay, now there are three exceptions. There are three exceptions where even if you don't make the payment within 180 days, there is no need to reverse the tax liability. What are those three cases? Okay, very, very logical. First one, in case of reverse charge mechanism. In case of reverse charge mechanism, anyway, we are required to pay the tax, the recipient is required to pay the tax to the government, and we can take the credit. Okay, even if you default with the supplier, doesn't matter, means doesn't affect this particular section. Okay, next one, where the supplies are made without consideration, still it is deemed as supply as per schedule number 1. If the consideration is 0, then there is no need to pay anything. You can still take the ITC. Okay, and the last one, when on supplier's behalf, when it was supplier's liability, but recipient has paid this discharges liability to the third party. Remember valuation chapter? Yes, recipient has paid this amount directly to the third person on behalf of the supplier, means it is deemed that as if we have made the payment to the supplier. In these three cases, you can still take the credit. Okay. Then going on to the next section, that is section 16 subsection 3, where we studied about depreciation benefit and GST credit benefit. Okay, if you have purchased any capital goods, okay, on that if GST was made applicable, but you took depreciation on the total amount, that is value of capital goods plus the GST on it, means you have taken depreciation on the entire amount. So now you cannot take the GST credit of the same. That is, either of the two is available. Okay, then next, section number 16 subsection 4. What did we study? In section number 16 subsection 4, we studied about time limit to avail the ITC. Okay, just now I told you, having invoice does not mean that your output tax liability gets reduced as it is. No, you have to avail the ITC. Okay, so ITC, last date for availing the ITC is 30th November of the next year. Okay, 30th November of the succeeding financial year, or the date of filing annual return, whichever is earlier. Now, let's say there was a particular invoice that was issued. For that, you have to check the due date, by when can you avail the ITC. Now, for that, there was a debit note, subsequent debit note which was issued. Then in that case, for that particular debit note, in that also there is some GST made applicable. For that debit note, what is the last date for availing the ITC? For that, you need not check the date of the original invoice. The date of the debit note will be relevant for determining the last date for availing the ITC. Right? Few examples, exceptions, etc. are given there, which we have already discussed. Okay, then going on to rule number 86A. Rule number 86A is talking about restrictions on utilization of ITC. Here we had studied that commissioner or any officer not below, means at least of the rank of assistant commissioner, if they have some reasons to believe that ITC credit, the input tax credit that we have taken, that is either it is ineligible or we have fraudulently availed in, then in that case they can put a restriction on us on utilization of the credit which is available in our electronic credit ledger, and this restriction can be put on us for a period of 1 year. Okay, whenever it feels that it should be removed, they can even remove this particular, they can withdraw these particular restrictions. Okay, example, let's say the supplier is a non-existent supplier, bogus supplier. Okay, or if I have taken the credit but I have not received the goods or services. Okay, or if the taxes not at all reach the government, or if the recipient is a bogus person, recipient is non-existent, okay, existing only on paper but not actually existing, then in such cases it is a case of fraud. Therefore, the commissioner or the officer not below the rank of assistant commissioner can put a restriction on us. It can put a restriction that you cannot utilize the ITC. Right? Then after that we went to rule number 86B. What did we study in rule number 86B? In rule number 86B we studied that if you are a big person, that is if you are making your taxable supplies in a month of more than rupees 50 lakhs, then the law says that whatever is your output tax liability multiplied by 1%, at least multiplied by 1%, whatever is your output GST multiplied by 1%, at least this much should be paid by way of electronic cash ledger, and for the balance you can use the electronic credit ledger. This is just for stopping the misutilization of the credits, right? At least this much. Okay, provided your turnover in a month, taxable supplies in a month exceeds rupees 50. That means you are a really big person there. Okay, now there were some exceptions to that. Let's say if that particular registered person, or if it's authorized person like it's karta, proprietor, managing director, etc., if they have paid income tax each, means income tax of more than rupees 1 lakh. Okay, if they have paid income tax of more than rupees 1 lakh for the last 2 years, whose time period for filing the income tax return has expired already. Okay, means everything for that particular 2 years under income tax is done, and for those 2 years the registered person or their authorized persons have paid income tax of more than rupees 1 lakh, means they are genuine people, so it is deemed that they will not do any default under GST. Then in that case you can utilize the entire 100%. You can utilize your electronic credit ledger entirely, means that 99% and 1% point is not applicable. Next one, if this particular registered person has received a refund, of input tax credit of rupees more than 1 lakh in the last year. Okay, in the last year, it can be due to export sales, or it can be due to inverted duty structure where the rate on raw material is more than the rate on finished goods. Then in such cases it is considered that they are genuine persons again. Okay, refund received in the preceding financial year. Third one was where let's say this we have to check it for every particular month. Yes, let's say we are there in the month of November. Okay, we are there in the month of November. Year started from the month of April. Okay, now we are checking it for the month of November, but for November we have to check that whether in November the supply was more than rupees 50 lakhs. If yes, then 1% should be paid by way of electronic cash ledger. But then I see that, oh God, from April to October I have paid so much amount in cash, so why should I pay it for the month of November? So government said, yes, good point. Government said that, okay, then just do a cumulative total. Okay, do a cumulative total from April to October. Okay, do a cumulative total from April to October. See how much was your output tax liability. Of the total output tax liability, have you paid at least 1% by cash ledger cumulatively till October? If yes, for November you are exempted. Okay, this benefit is not available for the month of April because that is your first month. You cannot do any cumulative thing. Right? And the last one is some specified persons like government department, public sector undertaking, statutory bodies, local authorities, etc. They are anyway excluded from all these restrictions, right? Okay, then after that the next one, we did a point about utilization of GST. Okay, we'll do it in the same sequence. How ITC is supposed to be utilized. For that we saw section 49, 49A, 49B and rule number 88A. Okay, what did we study there? Okay, whatever input tax credit is availed by you or whatever ITC is reflected in your GSTR 2B, can we say it gets credited to our electronic credit ledger? Yes, and once it is credited to my electronic credit ledger, after that I can avail that ITC and I can utilize it for payment of my output tax liability. Now, how do we utilize the input tax credit? Okay, if you have any IGST credit, okay, IGST credit is to be first utilized. Okay, IGST credit will be first utilized for IGST liability. Okay, if anything is left, use it for CGST and SGST. Any order, any proportion, any sequence, doesn't matter. Okay, but finish off the IGST credit totally. Then you are left with CGST credit. Okay, once you are left with, then going to CGST credit. In CGST credit, first utilize it against CGST liability. Okay, if you're still left with it, use it for IGST liability, but cross. Don't use it for SGST liability. Okay, then next one, SGST credit, S state. Okay, SGST credit. First you will use it for SGST liability. If still left, use it for IGST liability, but do not use it for CGST liability. Right? This is how we are supposed to utilize your credits. Right? This is what we had studied there. Now going on to section number 17. Okay, everyone here. Let's go to section number 17. Yes, here it is. Section number 17, apportionments of credit. Here section number 17 was there, then rule number 42, 43, etc. was there. Okay, what did we first of all study? In section number 17, we studied that yes, credit is available. Okay, but in some cases, suppose if your inputs was utilized for the purpose of exempt supply, or suppose if your inputs was utilized for the purpose of non-business purpose, then in that case, can we say credit in that respect will not be available? Okay, one is for non-business purpose. If I've purchased this particular mobile for my personal purpose and I take the credit, available or not available? Not available. Okay, if I'm purchasing a particular asset which I'm going to use it for sale of exempt supply, credit on that should not be available. If I'm purchasing a particular asset for my business purpose and for my personal purpose, then can I say only proportionate credit should be available? Okay, if I have purchased a computer, okay, capital goods I have purchased, which I am going to use it for taxable supply also as well as the exempt supply. Then can I say for exempt supply, whatever is the credit attributable, that should be disallowed? Yes, all those things are given in section number 17.1 and 17.2, and for that you have got your rule number 42 and 43, which is not there for CA inter students, but it is there at CA final level, right? So this is what we had studied there. And yes, the most important thing here is whatever inputs, okay, whatever inputs you have taken, input of goods, input of services, capital goods, okay, this will be fully allowed. Okay, this will be fully allowed if you are using it for doing taxable sales, if you are using it for doing zero rated sales. Zero rated is export treated at par with taxable, and it should be simultaneously it should be used only for business purpose. Then only your input tax credit on that particular input will be fully allowed. I hope I am very clear with this. Yes, this was all about your section number 17.1 and 17.2, right? Okay, then after that I am directly going to section number 17.5, that is your blocked credits. Okay, let's discuss about blocked credits. Everyone here, I'll just show it to you on the board. Here it is, blocked credit, section number 17, subsection 5. Okay, we have studied that in case of inputs, services, capital goods, etc. If it is used for non-business purpose, if it is used for exempt supply, then the input tax credit on that is not available, right? Now, apart from that, if we have purchased, if there are any inputs which are used for in the course of business, okay, there are any inputs which are used in the course of business. Even though it is used in the course of business, there are certain type of inputs on which the credit is totally blocked. Okay, it has been totally deemed by the law. Even if you are using it for the purpose of business, then too the input tax credit on that is totally disallowed. Okay, 10 points we are required to do under this particular thing. First one is motor vehicles. Okay, motor vehicles and other conveyances and related services. In that we had studied that a particular motor vehicle, okay, this will exclude vehicles, this will exclude railways, this will exclude less than four-wheeler vehicles with the engine capacity of up to 25 cc. Okay, what did we study for that? Okay, if there is any particular motor vehicle, which is used for transportation of persons having a capacity of up to 13 persons including driver, chota gadi, okay, small gadi, up to 13 we are treating it as small car, okay, or a small vehicle which is used for transportation of persons only, not for goods. Okay, if this is considered as ineligible motor vehicle, if we have purchased any such motor vehicle, then the ITC on that motor vehicle is totally not allowed. Okay, that is totally blocked. Example, normally I am purchasing a car and saying that I am using it for my business purpose. No, that is totally not allowed. But similarly, I purchase a truck for transportation of goods, then that will be allowed. Okay, but credit will be allowed in three circumstances. When I am engaged into the same line of business, I am purchasing car and I am selling car, credit is not blocked. Okay, next one, I am purchasing car, giving it on hire, means I am making a taxable supply out of it, no problem. Okay, and the third one, when I am using that car for giving motor driving services, no problem, the credit is allowed. Are you clear with this? So basically, if there is any particular motor vehicle of more than 13 capacity, okay, or if there is any motor vehicle for transportation of goods, then the credit is allowed. Okay, same to same point applicable for vessels and aircraft also. Okay, for vessels and aircraft, they are telling that normally if I purchase vessel or aircraft, input tax credit on the same is blocked. Okay, but if I am purchasing vessel or aircraft and selling it, no problem, credit is not blocked. Okay, or if I am purchasing vessel or aircraft and using it for transportation of passengers or transportation of goods, no problem. Okay, or if I am giving training, okay, flying the aircraft or navigating the vessel, if I am giving training on that aircraft or vessel, no problem. If I am using that vessel or aircraft for transportation of goods, okay, courier services via flight also happens. If we are using for that particular purpose, no problem. Okay, no problem means the ITC on that is not blocked, that is, it is available. Okay, then the next point was talking about its related services. Three things related services. Okay, motor vehicles, vessels, aircraft. In respect of this, if we have incurred any expenditure relating to general insurance, servicing, repair, maintenance, etc. Okay, if the above credit was not allowed, then even the credit on their insurance services, repairs and maintenance, even that will be blocked. Okay, but let's say I am the manufacturer of a particular motor vehicle, and if I take insurance services, then the credit is allowed. Okay, or if let's say I am the supplier of insurance services, then too I have taken this service from someone else. I am the supplier of insurance. I am ICICI Lombard. Okay, and I have taken some input services. Then credit on that will be totally allowed. Are you clear with this? Yes. So basically, if the credit on motor vehicle, aircraft or vessel was not allowed in the above two pointers, then its related expenses ka credit will also be blocked. That is credit on insurance, repairs, maintenance, etc. Example, I purchase a car saying that I am going to use it for my business purpose. The credit was blocked. Yes, the credit was blocked. Now on that, if I am doing any repairs and maintenance expenses, then that ITC is also disallowed. Okay, but let's take the example of a motor driving school. Okay, for that the credit was allowed. So if they people incur any expenses on insurance, repairs, maintenance, on that if there is any ITC available, then that will be available. That is not at all blocked. Right? Then the next one, fourth point was talking about leasing, renting or hiring of motor vehicles. Same three things: leasing, renting, hiring of motor vehicles, aircraft or vessels. Okay, on which ITC was not allowed. I said that I want to purchase a car for office purpose. Law says that no, it is not allowed. Means the ITC on that is not allowed. Okay, then I thought I will take a car on hire and then I will travel. Then if you have paid GST on this hiring charges, even that will be blocked. Okay, example, employer is providing such services to the employee. Okay, employer has taken a car on hire for the employee. Normally company does it for the purpose of their directors. Then in that case, GST on that is totally blocked. Okay, ITC credit on that is totally blocked. But if the employer is supposed to do it under a statutory obligation, some law comes and says you have to do it, then in that case the employer will have to do it, and in that case GST credit on such services, on such leasing, hiring, renting services is totally allowed. Very clear with this? Okay, or let's say my business is to take the vehicles on hire and give it on hire. It means I am into the same line of business, means the credit is going to be allowed. It will not be blocked. Understanding this? Yes, this was the first point, which was mainly talking about motor vehicles, vessels and aircraft. Right? Now going on to the next one. Next one is very, very simple. Food, beverages, outdoor catering, healthcare services, life insurance, health insurance, cosmetic and plastic surgery, and all these services. If we have taken these services, okay, if we have availed these particular services, even though they say that it is in the course of business, then to the credit on this is totally blocked. Okay, the credit on this is totally blocked because the law by default deems that this is a personal expenditure. Okay, even though it is done for business. Okay, let's say I have some clients coming, okay, and I arrange food and beverages for them, for which I have paid GST. Even though it is a business expenditure, I'll claim it as a business expenditure, but no credit will be available on that. But yes, again, if it is to be provided statutorily under any particular law, then the GST credit on that will be allowed. Or let's say, I am a caterer. Okay, I am a caterer. I want to provide the catering services to someone else. For that, I have taken any input services. That will be allowed because I am into the same line of business. Are you clear with this? Okay, then within that only, next one, membership of a club, fitness club, health club, etc. If I have taken this for my employees, I have taken it for myself, I am a proprietor, I have taken it for myself, then in that case, credit on the same is totally blocked, except when the employer is required to provide it to the employee under a statutory obligations. Right? Then the next one, travel benefits. Travel benefits extended to the employees on who are there on vacation, just like leave travel concession or home travel concession. They are telling that whatever expenses have been incurred by the employer for the employee, on that if he has paid GST, then the credit is not available, except when it is statutorily required to be done by the employer for the employee. Clear with this? So first point, motor vehicles, aircraft, vessels point is totally done. Next, food, health, all these things are totally done. Okay, next going on to works contract services. Third and fourth point we are going to do it together. Okay, works contract services and self construction. In case of, suppose if I avail any works contract services for construction of an immovable property. Okay, if I avail any works contract services, such a service where goods and services both are involved, but for the purpose of GST, as already studied in schedule number 2, works contract service is considered as supply of service. Remember, it was deemed as supply of service. So when you are availing this particular service, works contract service, and you are getting a immovable property constructed, then ITC on the same is not available. Okay, ITC on the same is not available. Basically, ITC will be available only. And one more thing, in case of immovable property, plant and machinery is not included. Okay, support structure to that plant and machinery is not included. Foundation of that plant and machinery is not included. Any expenditure not capitalized, means charged to P&L, is not works contract. Or we can say it is not an immovable property. Are you able to understand this? Okay, everyone, example, everyone here. Let's say I avail works contract services for construction of an office building. It is an immovable property. GST credit on the same is totally blocked. Okay, I undertake works contract services for repair of an office building, and that repair charges is debited to the P&L account. Debited to P&L account means not capitalized. Okay, not capitalized means GST credit on this will be available. I avail works contract services for construction of a plant and machinery. No problem. It is not an immovable property. Credit is available. Okay, structure and foundation. Support structure and foundation to plant and machinery is also considered as not an immovable property. Just remember that. Okay, that will be considered as plant and machinery only. Next one, special point, construction of telecommunication tower or laying of pipelines outside the factory. This is considered as immovable property. If it is considered as immovable property, ITC credit is not available. Okay, even if you have availed works contract service, ITC is not available. If you have done the construction on your self account, means I have purchased the goods, I have purchased cement, tiles, I get the work done, etc. Means I have not gone to a contractor. Then also the ITC on that is totally blocked. Are you able to understand this? Okay, now listen. So works contract is done. Works contract in case of immovable property is done, and self construction is done. Okay, just remember plant and machinery is an exception. Foundation to plant and machinery and support structure to plant and machinery is an exception. And if the expense is not debited to P&L, then even that is an exception. That is, ITC will be available on such cases. Okay, then after that, next one, inward supplies charged to tax under composition levy. Now let's say if I am registered under composition levy, then in that case definitely all my inputs are totally blocked. That is, the tax on my inputs is totally blocked. I cannot take any input tax credit. Okay, then we had studied about NRTP, non-resident taxable person. Non-resident taxable person, a person who is normally not a resident here in India, but occasionally he makes some supplies here in India. So whatever is his input tax credit, that is totally blocked, except if this NRTP imports any goods into India and he pays IGST, goods, not services. If he imports any goods into India and he pays IGST on import of goods, then only that credit is available. Otherwise, all his credits are blocked. Okay, then we had a exception, we had a amendment point coming up here. Any company which is doing any CSR related activity, for that, if it has used any goods or services, on that ITC is totally blocked, means that is your total expenditure. You cannot take the credit of the same. Okay, next, 8th point, any inward supplies which we are using it for personal consumption. This is very, very logical. If I am using it for my personal consumption, means I am not using it for my business or purpose. So credit on that is totally blocked. So this can come under section number 16(1) also, and this is specifically given in section 17 subsection 5 also. And then the next point is about free samples given, gifts given, any goods which are lost, any goods which are stolen, any goods which are destroyed. Okay, means can we say whenever there is either there will be no outward supply. Okay, let's say the goods are lost. I purchased some goods and those goods got stolen, that goods got lost. Then you cannot sell it. If you cannot sell it, then there will be no GST on the outward supply. So then its ITC should be reversed. Okay, or let's say you purchase something but you're going to give it as free samples, means zero value. Okay, so the ITC on the same is totally blocked. Okay, then in case of in case of BOGO, buy one get one. Okay, we had already studied this earlier, that there is nothing free. Okay, buy one get one, there is nothing free, even if the name suggests it is just a marketing gimmick. Okay, then in that case, no need to reverse any ITC, full ITC will be available. Are you able to understand this? Yes, acha. Now, a special circular that we had studied for medicines and drugs. Okay, suppose if in case of medicines, after the expiry, if in some cases we can return it back. That is, the wholesaler can return it back to the manufacturer, or the retailer can return it back to the wholesaler. Then in such cases, this is considered as a fresh supply. Okay, return is not considered as goods return. It is considered as a fresh supply. Okay, when it is considered as a fresh supply, can we say it is considered as a purchase by the manufacturer? And if the manufacturer later on destroys it, then the ITC on the same has to be reversed. Okay, means old transaction you have to totally forget. Can I say first manufacturer would have sold it to the wholesaler. Now the wholesaler is returning it back to the manufacturer. So forget the first transaction. Okay, now wholesaler, when he is selling it to the manufacturer, it is considered as a fresh supply. For manufacturer, it is considered as a purchase. He would have taken ITC. But now if he is destroying these medicines because it has expired, so ITC on that has to be reversed because the goods have been destroyed. We just now studied in the previous point, if the goods are destroyed, then the ITC has to be reversed on the same. And the last one, if we have paid any taxes because of fraud cases, detention cases, confiscation cases, then obviously once you pay the tax to the government and then you tell to the government, sir, please, I want the GST credit on the same, government will say, poda, government will say, get lost from here, right? And the credit on that is totally blocked. I hope I am very, very clear till here. Everyone, blocked credits in your head? Yes. Okay. Then let's go ahead. Let's go to section number 18. Okay, simple section. Section number 18 talks about credit in some special circumstances. Now here they are telling, okay, first case. Okay, everyone here, just focus here, everyone here. Okay, let's say I was earlier not liable to get registered. Okay, now I become liable to get registered. So within a time period of 30 days, we will study again, it is in a registration chapter. Within a time period of 30 days, we are supposed to apply for registration and then government is going to give me the certificate. Okay, if I apply it properly within a time period of 30 days, then the government, the certificate that I get from the government will be valid from the day when I was liable to get registered. Right from the day one, I become liable to pay the taxes on my outward supply, and I can even start taking ITC on the same, right? So now can I say before this I would have done some purchases on which ITC was not taken because earlier I was unregistered. So government says, okay, whatever stock you have on the preceding day of registration, okay, whatever stock, only inputs, okay, not services also, not capital goods also, only your ITC contained in the stock. Okay, you can be having some raw materials, you will be having some finished goods, you will be having some WIP, whatever is the amount of ITC contained in that, which was purchased during the last 1 year. Okay, ITC as on which day? ITC as on the preceding day of registration. Suppose if I got, if my registration became effective from 5th April, then ITC as on, or the stock as on 4th April has to be checked. Whatever stock you have as on 4th April, on that whatever amount of ITC you have paid, of that you can take the credit, provided it was purchased during the last 1 year. Okay, if you have purchased any inputs before that, then that ITC you cannot take. But whatever purchases you have done in the last 1 year, for that you can take the input tax credit. Okay, but just remember, ITC on services, ITC on capital goods is not available in this particular case. Okay, next one. Let's say I am not at all liable to get registered, but Khujli. Okay, but I want to now get, I want to take voluntary registration. Okay, then in case of voluntary registration, my certificate becomes valid from the day when it is granted by the government. Okay, let's say government granted me the certificate on 25th of April. Okay, so now from now onwards, from 25th April onwards, can I say I will have to start paying taxes on my outward sales, I can take the ITC, etc. But what about the old credits? So government said no problem, go and check your stock as on the preceding day, that is 24th of April. Okay, on 24th of April, what all things do you have in your stock? Okay, only stock, no services, no capital goods. I said I have this much amount of stock available with me. Okay, government said out of that how much was purchased in the last 1 year. So I said this much was purchased in the last 1 year. Government said you can take the ITC on the same. Okay, then next one, section 18(1)(c). In that case, I was earlier registered under composition scheme. Okay, now I am coming under regular scheme. Okay, if now I am coming under regular scheme, then now I will be paying everything. So now I should get ITC, etc. also. The government said no problem. The day when you convert, take the stock as on the preceding day. On the preceding day, whatever inputs you have in your stock, which was purchased during the last 1 year, take full credit of the same. Okay, I asked, sir, what about input on services? Government said services not available. I asked, sir, what about capital goods? Government said, okay, take the ITC on capital goods also. So whatever is the ITC on your capital goods, okay, minus 5% per quarter. 5% per quarter logic you should already be knowing, because the year they consider 60 months, right? 60 months, or we can say they consider it as 20 quarters. Life of the asset is considered as 5 years, that is 20 quarters. So per quarter 5%. So ITC minus 5%. Okay, 5% per quarter right from the date of invoice. Okay, that must be subtracted. So ITC minus 5% per quarter should be subtracted right from the date of invoice. Ma'am, why to subtract? Because till now it was used for the purpose of composition. That much amount of credit they will never give you, right? And the next one is where your exempt supplies now become taxable supplies. Earlier I was selling books, earlier books was exempted. Now let's say, for example, now let's say it becomes taxable. So in that case, now if it becomes taxable, I will ask for credit. Government says no problem, you will get the credit. I said, sir, how to get the credit? So government said the day on which your exempt supply became a taxable supply, from that day now you have to start paying the taxes. So take the stock as on the preceding day. As on preceding day, whatever was there in your stock, on that whatever was the amount of ITC that you have paid, okay, provided that stock was purchased during the last 1 year, you can take full credit of the same. I asked, sir, what about input on services? Government said forget about it. I asked, sir, what about ITC on capital goods? Government said okay, take it. So ITC on capital goods minus 5% per quarter from the date of invoice. This much amount of credit will be available. Okay, so in case of compulsory registration and voluntary registration, only ITC on input of stock. Okay, but in case of composition to regular or exempt to taxable, you will get ITC on goods also, and you will get ITC on capital goods also. Very clear with this? Yes, and the person who wishes to take this particular credit will have to make a declaration in form number GST ITC 01 on the website, and then This period can be extended also by a respective authority, and then once this is done, once it is approved by the authorities, then you can take the credit and it will be credited to your electronic credit ledger. But provided if the amount of this claim is more than rupees 2 lakh, then you have to get it certified. You have to get the declaration certified from a practicing chartered accountant or a cost accountant. Yes, then after that we did hush. Okay, then after that we did section number 18 subsection 4, which was reverse. Okay, that is earlier you were there under normal taxable scheme, or earlier you were doing taxable supplies, but now you are coming under composition scheme, or now your supplies are becoming exempted supplies. So now this is sad. Okay, so now can I say now you are going to go, now you are not required to pay any taxes. So now can I say your ITC is going to be reversed? Okay, earlier you were going to get the ITC, now your ITC will be reversed. So whatever was your ITC, okay, whatever is your ITC on inputs, okay, whatever stock you are left with now, okay, from now onwards you are not going to pay any taxes. So now whatever ITC is left with you, that particular ITC on goods, okay, on inputs, that will be totally reversed. Okay, that will be totally reversed. Whatever you have availed, whatever amount of ITC has been availed, that will be reversed. Okay, then what about ITC on capital goods? Okay, so whatever is your capital goods there with you, on that find out the amount of ITC that you have availed. Okay, now whatever is the ITC pertaining to the remaining tenure. See, till now you were using it for taxable purpose, so that ITC will be available. But now onwards you will be using it for composition scheme purpose or exempt supply purpose. So whatever is the ITC pertaining to the remaining life, that much ITC should be reversed. Okay, example, let's say I have used a particular capital goods, and this has to be calculated. Our ICI calculates this in terms of months. Okay, let's say I have used a particular capital goods for 45 months. Okay, let's say I've used a capital goods for 45 months. So remaining tenure is how much? Remaining tenure is 15 months. Okay, so whatever was your ITC, okay, divided by 60, multiplied by 15. Can I say this pertains to the ITC of the remaining period? This much should be reversed. Okay, ma'am, why reversed? Because now it will be used for ineligible purposes. Yes, so 2 ITCs on goods and on capital goods, it got reversed. Okay, and whatever is the balance amount of ITC left in your electronic credit ledger, that will get lapsed. If you still have any amount left in your electronic credit ledger, that will lapse, because now you don't need any input tax credit. Are you clear with this? Yes, this was your section number 18 subsection 4. Then we went to section 18 subsection 6, where you have supplied, where you have sold your capital goods on which we have taken ITC. Okay, let's say I purchased a capital goods. Okay, and now if I want to sell it, okay, now if I want to sell it, then in that case, at the time of sale, what will be the GST effect on that? So they are telling that whatever was the ITC that you have already availed, minus 5% per quarter right from the date of invoice. Okay, that much amount of ITC is after subtracting, you will be left with the ITC which is attributable to the remaining months. Okay, example, capital goods life is considered as 5 years. From the date of invoice, let's say 2 years have elapsed, means I will be subtracting 40%. Yes, 2 years have elapsed. 2 years from the date of invoice have elapsed, means 8 quarters have elapsed, means 8 quarter into 5%. 40% ITC is already used. Yes, so ITC minus 40% means 60% ITC is left. That 60% ITC or the ITC payable on the selling price. Now you will be selling the capital goods, right? So actual GST payable on the capital goods price. This the remaining 60% ITC or the tax payable on the capital goods, whichever is higher, this is the amount of GST payable under section 18 subsection 6. Okay, let's say everyone here, let's say ITC which I had availed, okay, ITC which I had availed at the time of purchase was 1 lakh. Okay, I used the asset for 2 years. So can I say 40% will be subtracted? Okay, ITC availed was 1 lakh minus 40%. Minus 40% means I will be left with 60,000 rupees. Okay, 60,000 is one particular figure, and I am going to sell this capital asset at 5 lakh rupees now, which is taxable at the rate of 18%. 5 lakh into 18% is going to give me 90,000. So 60,000 or 90,000, whichever is higher. So the tax payable on this particular transaction is equal to 90,000. Okay, but in that we have got an exception. The exception is if you are selling molds, dies, jigs, fixtures, refactory, bricks, etc. in scrap, then no need to do this higher working. You can directly pay the tax on the transaction value, means whatever is the selling price, on that you can directly pay the tax. Okay, then section number 18.3, this was very, very simple. What about the ITC? Whenever there is any change in constitution of the registered person. Okay, let's say there is any change in constitution like sale, demerger, amalgamation, death of the sole proprietor, transfer of business, along with all these things, along with transfer of liabilities also. Then in such case, whatever is the unutilized ITC kept with us, by doing the necessary procedures, this ITC can be transferred to the new undertaking. Okay, but what will happen in case of demerger? Okay, in case of demerger, suppose if multiple entities are formed, then the credit will be distributed to all those entities in the ratio of the assets transferred. Okay, in the ratio of the assets transferred. Let's say I have transferred 60% to one entity and 40% to another entity, then in that particular ratio the amount of unutilized credit will be transferred. Okay, we have got few, we have done in the main lectures also, we have done many examples on this. Then next one is your rule number 41A. What did we study in rule number 41A? Okay, here there was no demerger, merger, amalgamations, etc. happening. I am a particular entity. Okay, my another office which is there within the same state, it wants to take a separate registration. Allowed or not allowed? Within same state, can I have multiple registrations? Answer is yes. Then in that case, suppose if multiple office or second office is getting opened in the same state, then whatever proportion of assets I have transferred to that particular office, that much proportion of unutilized credit can be given to that office. Are you clear till here? Yes. How ITC is utilized, that we have already done. Yes, so this was your section number 16, section number 17, section number 18, yes, of your input tax credit chapter. Yes.